What's up, everybody? So I've been working on a video about uranium, like what it is, and also obviously the tickers in the uranium sector. But somebody wants to look at a ticker GRRR. So let's look at that, and then we'll do the uranium. So Guerrilla Technology. It's a really small company, 46 million market cap. It's in the UK. Kind of weird, pretty weird revenue. It went from 45 million down a little in 2021 to 42. Then it dropped in half to 22. Then it went up to 65. So I guess that's good. Hey, what's going on? I'm good. Khaled, right? From Netherlands. Guerrilla Technology. Is anybody familiar with this company? It's kind of an unknown company. Such a small market cap. Let's see if there's any valuation on Simply Wall Street. What's up, Neil? Hey, Byron. Well, look at Simply Wall Street. They're at $28, even though it's trading at $5. So if you want to kind of learn more about valuation, one way to do it, if assuming you're a member of Simply Wall Street. I think if you're not a member of Simply Wall Street, you can still look at one or two tickers a day. I think so. Thank you. So generous. And you didn't have to. You've been so generous in the past. I would have done it even if you didn't donate. But that's really nice. But on Simply Wall Street, if you're ever curious how they come up with the valuation, the $28, they actually show you. You hit data. See, there's a data. I don't know what learn is. Learn is just explaining what a. Why do you say that's rubbish, Neil? Are you British? That's a British word, rubbish. And this is a British company. So you must know about them. Because rubbish is not a word we use in the United States. Even though I know what it means, but it means like junk, garbage. Oh, Robin. Oh, you meant Simply Wall Street. Well, Robinhood is a broker. You know, every broker has their own due diligence. E-Trade, you could do like. So you're saying you use Robinhood to do due diligence in addition to being a broker? Because Simply Wall Street is not a broker. You can't make trades on Simply Wall Street. And I'll be honest, I don't really like it that much, Simply Wall Street. Even though they sponsor some of my stuff, I don't like the valuations that much. And really the only reason is the presentation. It looks nice and it's good to put on videos. I can go through it on videos, but I don't think they provide that much value. I actually, my favorite website is Yahoo Finance, the free one. But yeah, $28. So if you're ever curious, you're on Simply Wall Street, you want to see how they value, you can hit the data button. Yeah, I'll check it out. I mean, I don't want to put my money in Robinhood because I just have it all in E-Trade. But I'm sure I can sign up for. But anyways, so they show you how they do the valuation. This is just another way to learn if you're trying to learn how to value stocks. Like they tell you the model they use, and you could even email them and ask them questions. I've asked them questions before. They use a two-stage free cash flow to equity model. Because when you value a bank and you value a technology company, you probably have to use two different models. You can't. Not every model fits in the same package because companies are so different. To tell you the truth, every company is unique in its own way. Like Coca-Cola and Pepsi, very unique, totally different companies, and you think they do the same thing, but if you look beneath the companies, they do very different things. They own different companies. They have, especially Pepsi has a lot of entities beneath it. They calculate levered free cash flow. They use analyst estimates to do their valuation. They don't come up with the numbers themselves. Here's a discount rate. You can use the same discount rate in your model. 9.4%. So let's just see what I use. Finbox because I used to calculate all myself, do all the math myself, but then I was like, if I'm showing a video to people, I want them to be able to replicate it themselves. So that's why I kind of get all the data from different sources, so you can do the same thing. Like Finbox is free, which is why I like it. Finbox, you go to cost of capital. So that's a lot higher, 12% up to 14%. I guess the reason I don't like Simply Wall Street, and they do pay, if somebody joins Simply Wall Street and uses my code, I'll get paid for it. I think I got paid once, so it's not like I make any money off of it. But their valuations are so high, I feel like they artificially pump up their valuations. So almost everything's undervalued, it seems, and it's really, really undervalued. So that's why I don't like it so much. But I go onto these sites to get more data for my videos. And the real reason I picked Simply Wall Street is because when I started doing videos, I just wanted something to compare to my valuation. So I can say my valuation is $18 a share, and then I would show Simply Wall Street's valuation is $25 a share or whatever. So I just wanted a comparison, and that was just the first website I found when I Googled, stock valuation, and I just kept it. So you can see they use a really low WACC, and I'd probably be closer to these numbers. A 9 WACC is for a more larger entity, a little more mature, not like a $50 million company. But it's fine. It's not a. They use a risk-free rate of 2.4%. I think I used 2.5. Equity risk premium 5.5. That's usually you'll see an equity risk premium for non-US companies, because non-US companies UK is not really risky, but especially like China or Brazil, there should be a pretty big premium built into it because of the country risk. It looks all fancy and stuff, but I don't think they come up with it. I don't think everything's so undervalued. So I don't think they're that good at this, and I could point out why, but it kind of gets boring. But that's why I do my own valuation. And I could rebuild. I could do like reverse engineering and rebuild their model, but I don't like it. I think they go out too far. They go out 10 years. And some people would argue differently. I just think it's hard enough to predict 2-3 years in the future, let alone 10 years in the future. Things change a lot. So they have the levered beta. Do you know what that means, levered? It's actually pretty straightforward. I'll yeah, I'll just show you real quick. So say we're real estate investors, me and you, and we wanted to buy a property for $500,000. I'm going to do it as simple as I can. So we buy a property. It doesn't matter. You could say it's a residential property, and we buy it, we fix it up, then we rent it out, right? So I'm gonna show you the unlevered versus levered. It's actually very straightforward once you see it, but people think it's actually confusing. My keyboard is just not working anymore. So the cost of the property is the same regardless of it's levered or unlevered. And then let's just say I'm just going to fix the amount we put in to fix it. Like we bought a new kitchen, we redid the lawn. This is just our little business. We fix up properties, not beating up properties. We just kind of fix them up a little bit and then rent them out. So total, how much out of pocket we spent on this property. God damn it. Oh yeah, I should go back. So I always get off on these tangents. Okay, I'll do it real quick. Annual income. That's how much we charge for rent. Say it's like $4,000 a month. So we have 8% margin. In the unlevered, unlevered is assuming you don't take a loan. But say we had to take a loan for $400,000 and we have to pay $40,000 of interest on the loan annually. 10% interest, high interest rate. So in this case, our levered free cash flow, levered means using debt, is 8,000. Unlevered is 48,000. So whether you use debt or not, you calculate both. Because if you use debt, you have to also calculate unlevered, because debt is kind of separate from the actual project. Because debt is unique to the person investing in a project. Some people may not need to use debt. Some people may get at different interest rates. Victor, what's up? I was going to ask you something, Victor. I can't remember what it was. Oh, right. On the lodging stocks, you were commenting. I really think that's really inflated, especially Marriott and Hyatt. Really they went up so much. For good reason, travel is back, But I think the Wyndham didn't really go up that much, and I think there's a lot of potential there. So the only unlevered just means you didn't use debt to fund the project, and levered means you use debt. That's all. That's the only difference. Even if you use debt, you still calculate unlevered. That's what I'm saying. This is not unlevered. This is relevered and levered. I don't know why they have this twice, but let's just forget about that. Let me go back to GRRR. Okay, so if you have Simply Wall Street and you want to know how they value it, they give you kind of the high level stats up here, and then they project the free cash flows. That's how you value any asset, whether it's a stock, a piece of real estate, a car, if you're using that car for your business. So they're projecting the free cash flows into the future. So they project negative 12 million this year, 7 million next year, then 9 million. And you can see they projected up to 2033. And then they do a terminal value. And they tell you how they calculate a terminal. Oh, no. This is just, they calculate it. This is just 10 years. So they show you the 10 years of future free cash flow estimates, and now the terminal value. And the terminal value is based off of the 2033 number. Then they present value the terminal value. This is what I do in my model too. And we could break this down if you want, spend time, but now they calculate the total equity. And then they PV it. So that's how they do it. It's similar. We all do the same thing when we value a company. We project future cash flows, then we discount them back to today. Some of us go further into the future. Some of us use different WACs. Some of us, it's all, the inputs are different. $8 million in 2025. Let's just value them real quick just to see what we get. $544. She's such a small company. 40. So if you're not comfortable with predicting the future, you can go to a lot of websites. This website, it tells you you see this box up here? It's predicting the revenue for 2024. And there's 3 analysts that are predicting that, 79 million. And most companies, if you read a company's quarterly reports, or annual reports, they'll tell you what they project the revenue to be for that next quarter or for the current fiscal year. So these analysts aren't like just guessing. They're probably using similar numbers as the company uses. But if you want to know 2025, most companies don't usually go a year out. You own DNN and UUU in Global Atomic. And then for 2025, look at that, 104 million. So you can just use the analyst projections. You can just start out with that as your baseline, 79,104, and then you can massage it. So I'm going 79,104, and then it looks like about a 20% jump. So I'll increase it again 20%. And this is a formula I used. So obviously my valuation is negative because it's using free cash flows from the past. So I have to kind of adjust this. Okay, yeah, I'm trying to be conservative. I'm trying to... So I'm at $12, and I'm pretty conservative, and the stock is at $5.44. So it seems pretty undervalued. But this is a hard one to value because they've never had positive free cash flow, and their revenue is all over the place. They're at 28. There's probably not any analysts. Oh, there's 3 analysts. 3 analysts at $43. Sheesh. This is what Khaled, do you know why? Like, it just looks odd. Revenue 45 million in 2020, and then it went down to 15 million. You know, when you have such small revenue, you generally don't see big drops. I mean, if it was 2018 and they had 45 million, and then in 2020, if they were like an airline company, and that was the case, it would make sense. I just don't get why there's such a massive drop. But then it comes back, so I guess that's good. They break their record in 2023, 65 million. So this is real revenue. And they're projecting 79 million for 2024. So don't eat the yellow cake. Don't eat the yellow cake. If that was from Chappelle's show, he did a skit, and they're like, don't, and he had yellow cake. I do like some of their screens. Like, they'll show you the earnings and then free cash flow, but this, it's hard to look at because it's all negative. But it is interesting when you see how earnings are converted to free cash flow. Their debt I mean, you really wouldn't want a company like this with debt. When you're losing money, the last thing you want is debt. You want to fund all your expenses with equity. But I mean, I don't know what the debt is. It could be, not all debt. Some debt is worse than other debt. Okay, the CO is this is something also to do, especially with a small company. Maybe just Google the CEO to make sure CEO background. Yeah, we'll get to the cash. He looks kind of crazy. He doesn't look like a typical CEO. Oh, he's involved in SPACs. Is this a SPAC? It's a SPAC. It started at $100. It actually started at $10. And then they did a 1-for-10 reverse stock split in April, 1 month ago. Because it started out at 10 and then immediately went to like $36. The only reason it says 360 is because they did a 1-for-10 reverse, but it was actually $36 in July 2022. But they have to adjust anytime you do a split, whether it's a forward or reverse, you have to adjust the past. SPACs. That's kind of one of my rules. Avoid SPACs, but it's your money. So it went from 555 in February. It doubled to 11. And that's my target, 11 and 12. Yeah. What do you guys think? I think this is not so bad. It's gotten beaten down. It's it doesn't have a big only 12% institutional ownership. Hedge funds, a lot of hedge funds and private equity. Well, 6% hedge funds. VC and private equity, 16%. I wouldn't say it's good on a long-term basis, but I do think it's pretty good. It could be a good swing trade. I definitely see some value there. Let's go to their financials. Guerrilla Investor Relations. Well, this is a British company, so they don't have a 10K. I don't like looking at non-US financials. I feel they're hard to read. And I don't think it's because I'm used to US financials. I just think maybe it's because I'm used to it. I don't know. There's no quarterly filing. It's definitely mysterious and risky. There's no doubt about that. I just have such a hard time finding information for non-US companies. It's not like, I think GAAP has its flaws. That's for sure, because you're kind of forcing every company to use the same accounting standards, and companies are widely different. That's where kind of our job comes into value and understand it better. But I think GAAP is much better than IFRS. So this is their investor presentation. Let's just go through it real quick to learn more about the company. I was hoping they would have their income statement and balance sheet on it, but okay, let's see if we can find. It's like I type in current assets and nothing comes up. Like, oh, I thought I typed in current assets. Okay, I guess I just, okay. So when you look at the balance sheet, you'll look at the health of the company. So think of it like this. If I wanted to learn about your net worth, I would look at your balance sheet. You don't have a balance sheet, but I would look at how much cash you have, how much assets you have. Do you own a home? I would look at your liabilities, your debt. So if I wanted to learn about your net worth, I want to look at your personal balance sheet. If I want to learn about how much money you make on a daily, weekly, or monthly basis, I would look on your income statement, your personal income statement, which is show your income, which is probably the money from your job, and then your expenses, which is how much you pay for food and rent, or your mortgage, etc. So that's why balance sheet, income statement is not more important. Certain companies, I'd rather look at the income statement. I'm not like a Microsoft. I'm not concerned about I'm not concerned about them going out of business or running out of cash. I'm more concerned about how much revenue they had the past quarter and their net profit the past quarter and their expenses. Small companies like this, I am a little concerned about their viability. Like, are they going to be able to maintain a business 2 years from now? So how do you do that? You, Khaled said, look at their cash. They need a runway, right? You need a cash runway. So not much. I mean, it really dropped. At the end of 2022, 23 million of cash. At the end of 2023, 5 million of cash. Let's see, financial assets of fair value. But they have financial assets, which are like, bonds and maybe stocks, probably not stocks, but bonds, commercial paper. So their cash is really these top three. Because if you have money in the stock market, that's almost like having cash. Because at any time you can sell it. It's very liquid. You can convert it to cash anytime you want. When you own a car, you can't just convert that to cash at any time you want. It would take at least a week or two to gotta find a buyer, right? Same thing with a home. You can't just convert that to cash anytime you want. But stocks and bonds are highly, highly liquid, which are really close to cash. That's why they're so high on the assets. The top asset is the most liquid, meaning the easiest to convert into cash. It's cash itself. Then you have financial assets, which are really liquid. Inventory. Then the least liquid gets, you got intangibles. JB, what college courses would you recommend most that would? Are you that young? You're in college? Honestly, I don't know. I hate, people ask me these questions and I sound so cynical. Like, what books would you read? Honestly, I got nothing out of college. I mean, it's so like high level and abstract, and it's never like real world. I got so much out of just grinding myself, like looking at this stuff and then watching a YouTube video. But if you could take a college class, I think if you could understand accounting a little better, then things kind of fall into place. Because when I started reading financial statements, most of it I didn't understand. Like I would read it, I go, okay, cash. I understand what cash is. What the hell is contract assets? Then I'm like, what the hell is prepayments? And then, but eventually it kind of falls into place. You learn a little more each time. Yeah, Victor, you did accounting. I started with accounting, and after a year, I switched to finance. But I really, and I got my MBA, and I think school is really important, but I really didn't learn much at all. I learned on working. I will learn a lot working. So yeah, they're just because they had 23 million of cash doesn't mean, and they have 5 million now, doesn't mean they're low on cash. They just bought assets with it, like bonds, just to earn interest, because cash probably yields 2-3%, and you can get like 5 or 6% on the money market. So they have a good runway. They have 33 million of cash runway, but let's see how much. Let's see their operating. Their statement of cash flows to see how much cash they lose. This is why I hate non-U.S. companies, because U.S. companies would have statement of cash flows. Non-U.S. companies, I don't know. Well, they're profitable according to this. They have positive operating income, positive net income. Victor, thanks so much. You're really nice. I've been learning from you too, so you're doing a great job. Everybody check out his channel. But how does it make? Oh, they do have positive operating income for 2023. Colette, are you still here? So I wouldn't net income doesn't mean anything. I would look at free cash flow. So in 2023, they burned the most cash flow, 13 million, more than prior years. And that's not a knock on the company. Sometimes you need to burn cash to expand. They may be expanding. I don't know exactly why, because they didn't even give us the statement of cash flows, so I can't, which is annoying. But at least we know that they're burning 13 million of cash, and they have 33 million of cash. So they have 2-3 years of cash runway. So they're doing okay with cash. But don't be like, I hate people who use that as an excuse. Like I say, oh, this company, the company's terrible. They never make money, and they're not run well. And then the person responds with, but they have 50 million of cash. How could you say they're not doing well if they have 50 million cash? Cash doesn't mean anything. Just because you're good at raising money from investors doesn't mean you're running a good business. You want to be able to, have a positive net profit, bring in positive cash flow, And if that's not going to happen, then you can raise all the capital you want. They didn't. Yeah, they're profitable. Let's. You see, it gives us no information. All it gives is the revenue, cost of revenue, gross profit. I have no idea how they've had positive. I could almost guarantee the only reason they have positive net income is because they had a big gain on the sale of like an asset, or a big gain on something like that. It just seems. Well, they do have positive operating income, so maybe they don't have a big gain. They don't give much. They don't make it easy. 29 million of adjusted EBITDA. That's good. No, their financials don't mention free cash flow. At least this one doesn't. It just mentions cash on the balance sheet. I would be interested in seeing the statement of cash flows. Okay, let's see if we can find it here. They're such a small company. When you get really small, you don't have as, I guess you're not required. Well, they don't have positive cash flow, though. I mean, it's negative every single year. The negative cash flow. And just so you know, on my DCF, I assume they would have positive free cash flow this year. Positive 6 million. Next year, positive 8 million, and 10 and 13 million. So I did assume they would have positive in my model, even though it was negative 13 million in 2023. But I don't see anywhere where it's positive. Let's see an annual report if they show us. Okay, operating results. Their contracts they had 250 contracts in 2022. Now it's 197. It's just such a bizarre. I just can't. This doesn't make sense in numbers, and it's hard to really confirm because Okay, here we go. Cash from operating activities. So this is in 2022, they had a net loss of 87 million. 2023, they had a net gain of 17 million. But when you look at operating cash flow, because that's much more important, operating cash flow, they lost 9.5 million of cash in 2023. They lost 9 million in 2022. They actually gained cash. It just adds to the confusion for me. So they had a positive operating cash flow in 2021. But of course, free cash flow is operating cash flow minus capital expenditures. So even though they had positive operating cash flow, they spent 7.5 million in property, plant, and equipment, which is why they have negative free cash flow. So how did they go from 17 million positive to negative 9 million? Well, it's right here. God. They actually had a positive 12 million in credit losses. So that improved their cash flow. It went up 12 million. And then they had a revaluation on warrant liabilities and convertible preferred shares. I could explain what that means if you want, but when they issue convertible securities or warrants, they have to value those assets on their income statement. And then as their stock goes up or down, it gets revalued. And generally, if the stock goes up, then whoever holds the warrants or convertible preferred shares will convert their securities to equity. They'll get stock in a company, which is good for this company because they don't want to have to pay back. This is like debt; they have to pay back. But if the stock goes down, then that shows up as a big loss on their income statement. But the big one is this 33 million of contract assets. Negative 33 million. It's just how many red flags can you throw out there for this company? It's just one after another. So let's see what this 33 million is. That's really moving the needle big time. So contract assets are kind of similar to like accounts receivables. Like you have a contract to supply something to another company. Maybe if you were like Apple and another company wanted to buy iPhones, they would contract with Apple, give us 10,000 iPhones, and then that's carried on the balance sheet until Apple fulfills the order. Because they can't really book, Apple can't book that revenue because someone says, give me 10,000 phones. They have to actually make the phones and deliver them, but they do have the contract in place. So it is an asset to Apple at that point, or a liability, depending on. Here's the They have contract assets related to the Egypt contract of 34.2 million, which was expected to be converted to accounts receivables with anticipated progress payment from the GOE, government of Egypt, I think that's what it is, in the subsequent year. So there's your answer. That's why, and if you So that's. Are you with me, Khaled? I mean, it's not the most straightforward. I mean, it makes sense to me, but it's hard to explain. But I mean, I like it. I like looking at stuff like this because I learn. It's a little nuanced. So in layman's terms, they entered into a contract with the government of Egypt for $34 million. And they booked the $34 million of revenue. So obviously that's going to really drastically boost their revenue. But they didn't actually, the contract is still in the works. So they didn't actually get paid a penny. But they are booking the revenue in 2023. So it gives them net profit, which looks good. But when you look at a statement of cash flows, the purpose of the statement of cash flows, well, the operating cash flows, the purpose of operating cash flow is to take net profit and convert it to cash. Since they booked the revenue but didn't receive the cash, they have to minus 33 million to adjust their net income number. When they do receive the cash in next year, or this year maybe, then it'll show up. Then you'll see possibly a net loss in 2024, but a lot of cash inflow because of this Egypt contract. It's interesting. I mean, I wouldn't invest in them, but it's interesting how nuanced it is. But it's a great way to boost your, because people don't look at statement of cash flows. They look at the income statement. And then you'll see on the chat boards, people like, if somebody bashes this company, then someone's response will be, well, they tripled their revenue from 2022 to 2023, and they're profitable. They have a net profit of 13 million. But that person is just looking, who doesn't really understand it that well. Just because they have a net profit doesn't mean they did well. Because Egypt, what if they pull out? There's nothing this company can do if Egypt just pulls out of the contract. It happens all the time. So if you were to look at the income statement for valuation purposes, I would strip out 30 million from here. So just because I don't think you should count that 32 million. So they really had 32 million of revenue, which is still lower than 2021. And they would have had a net loss. That's why I say if you don't want to deal with accounting, just look at the statement of cash flows and just look at operating cash flow. You don't have to deal with accounting. Although there's still some things you have to deal with, but you should do a stream reviewing the best or most entertaining Yahoo Finance comments. That would be a good stream, actually. I wouldn't mind doing that. Yeah, but you're so generous. If I summed up all the money people donated on my channel, about half of the donations, or maybe even like 60%, are from Khaled. So that's really generous. So thanks. But going back, I definitely don't think it's a good long-term trade. But I could see a big pop because it's kind of like somebody said, somebody, like I said, like, I'll give you $10,000 for every pound you gain. Like if you gain 10 pounds, you get $100,000. So like a genie will magically give you $100,000 and put 10 pounds of fat on your body. And the person said, well, it took me like 6 months to lose the last 10 pounds. So I'm not gonna, but it's all relative, because it's actually, losing 10 pounds is really, really easy if you're 500 pounds. You can just eat like a lot instead of a lot. Instead of having 8,000 calories a day, you can just have 7,000 calories a day, and then you lose 10 pounds after 2 weeks. But it's really hard to lose 10 pounds when you're only 10 pounds overweight, or it's how far you are from the mean. If you took two men 6 feet tall, and one is 400 pounds and one is 200 pounds, and the first to lose 10 pounds gets $1 million. It's just so much easier if you're 400 pounds. So it's how far you are from your mean. And you could relate that to stocks too. If you think about the mean, like where does a stock belong? Like at what point? If this stock belongs at the $12 range, like right now it's about at its mean, at its average. So for it to go up 10% from here is unlikely. But when it's at 544, to go up 10% is much easier. Well, think of a good company, because it's harder to think about for a bad company. So say we all know Meta is about a $500 stock. Say most people can agree on that. So for Meta to go up 10% when it's 300 is so much easier and more likely than to go up 10% when it's 500. Just because it's 300 doesn't mean it has to go up 10%. It could actually go down 50%. Same thing if it's 500. Doesn't mean it has to go down 10%. It could still go up 50%. But I'm just saying, the law of averages, if you play this game and try not to buy things when they're overvalued and invest in things when they're undervalued, you're going to probably make more money in the long run. But let's do uranium. That's why we did the stream, right? Okay, yeah, have a good night. I know it's probably pretty late. I'll be 2 minutes. Okay, so there's a YouTuber. He has this uranium channel, and I put the link in I sent like a blog out yesterday with the link, but this is a good article. It gives a few pages on uranium, and you can obviously be a member. Not that, I don't know, I'm never a member to these things, but because you can find all the stuff online anyway, but I'm sure it's probably easier. He probably makes it easy to get the info if you're a member. So yeah, I started putting together a video on uranium, like just gathering the content. And every time I do this, I always like get kind of, I lose steam. So it's maybe if I'll just go through it. I know it's gonna probably be boring. Hopefully it's not too boring. I try to, it's more about me too. I'm trying to learn more about it as well. So if I do a video, I'll, but in the video, I explain like what uranium is. So, but these are at least the ones I found, these are the publicly traded uranium stocks. Cameco, the Canadian company, is the largest by a pretty good margin. A little nose candy. Yeah, can you hook me up with that? 23 billion, which is much bigger than these others, all the others combined. UEC, I know people talk about that on my channel, but they're all pretty much losing money, negative free cash flow, except for Cameco. And Cameco pays a dividend, a really small dividend. They generate a lot of revenue, almost 2 billion. So their numbers look really good. I mean, trading at 56 times free cash flow, so that's not that good, but and uranium is a hot industry. And I think a lot of the stock is really dependent on the price of uranium. So if uranium goes up, like the spot price of uranium goes up, these stocks will go up a lot. I thought there's a uranium spot price in a. Well, I'm sure this moves with the price of uranium. So you can see it's kind of like a commodity. Commodities don't go up over time. They kind of go up and down, up and down. So it went way up in 2007. It also came up a lot in 2011. Then the Fukushima thing, where Japan lost like most of their nuclear reactors. There was like a tsunami and a tornado in Fukushima, and it kind of knocked out their uranium reactors, which totally lessened the demand for uranium, global demand, because Japan didn't need any more uranium because they didn't have the means to convert it to fuel. So these are publicly traded companies. Then you have, on a periodic table of elements, uranium is one of the 118 elements. It's right here, U, atomic number 92. So uranium is naturally occurring, and it's part of the actinides, which I didn't know about before I did this video. So if you're atomic number 89 to 93, you're an actinide. And actinides are radioactive. Here's an interesting thing. A chicken egg size amount of uranium fuel provides as much electricity as 88 tons of coal. You know, it's pretty powerful stuff. And it's really common, actually. You think uranium is rare, but it's actually 500 times more common than gold. Because there's actually small amounts of uranium almost everywhere, in rock, soil, even our bodies. But it's very trace. It's not going to affect us. And you usually don't die from touching uranium. It's not like that. It's not like in the movies. Yeah, BNED, we should look at that. It surged like 60%. Last week, and then it started coming back down. So yeah, so it went from like 31 cents to over $1. That was on 5/22. And then it came down to 79 cents, now down to 58 cents. So it's like, that's why I always I never know when to buy these things. Like should I wait another day or two for it to come back down to 20 cents, or is it going to surge back up? It was over $10 in 2021. So assuming that that's just based on the fundamentals and not like the meme pump. So it was over $10. So theoretically, just based on the company's numbers, it was 15 in 2015. It's just really a swing trade. 35 million shares shorted last week. Float is only 53 million. Yeah, I mean, I could see another push up. I have a hard time timing these things, even if I wanted to buy it. Like, it always seems like you unless you're an insider or trade pre-market or post-market, it's hard to buy it at the right price. It usually surges before you get a chance to buy it, and it drops before you get a chance to sell it. Yeah, they have 1.5 billion of revenue. But revenue is, and they do have positive free cash flow. Although it was negative in the first quarter. So it's kind of like up and down, their free cash flow. It's kind of right before a company goes bankrupt, their price of sales is usually close below 0.1. So either they're going to go bankrupt or they're going to surge like 1,000%. Yeah, we should look at their Look at their financials. Okay, so isotopes. So uranium comes in different variations, size, physical appearance, but they have the same properties in order to be uranium. So there's 3 types of natural uranium: U-234, 235, and 238. So 238 is the most common. That's 99% of the uranium found on Earth. But most nuclear reactors use U-235. So in U-235 contains less than 1% of uranium. And reactors need a much higher concentration than that. So they have to artificially increase U-235, called enrichment. That's what a lot of these companies do, like chemical. They have to process and enrich the uranium. So it's just enrichment is just increasing the density, the amount of uranium, and it could go from below 1% to north of 90% uranium. So something is considered low enriched if it's below 20%. And you could sell low enriched. It's kind of like going to the gas station. You know, you can get different grades of gas. It's like that with anything. Like you can get really, really nice, high quality gold. You can get low quality and cheap gold. So most commercial reactors use low enriched uranium, below 5%. But, okay, high proportions of U-235. So if you go to like, if you need fuel for a submarine or for nuclear weapons, it has to be much higher quality than LEU. It has to be much more concentrated. So yellow cake is what they call the uranium. Here's a yellow cake. It looks good, right? The yellow cake, it's converted, like this is what enrichment is. They convert the yellow cake to gaseous form, and that's called uranium hexafluoride. And then it's pumped into fast spinning cylinders. And there's a lot of mixtures and things happening to improve the density. So in the 1900s, the way uranium was mined was from open pits or underground excavation sites. But somebody came up with in situ leaching, and that's how most people mine uranium. It mixes water with, you know, other elements. So it's probably like 60% of uranium miners do in situ, and maybe 40% do the old way. But the problem is, anytime you mine something, whether it's copper, gold, uranium, it's the waste. That's the problem, because what do you do with the waste? It ends up in our landfills. Or people die because it's somehow, you know, there's like a tornado or something, or an earthquake, or somebody just makes a simple mistake and it gets into the water system in that town. Or if you know, if there was like somebody drove their car into your house, like it probably wouldn't affect too much besides your house. But if somebody drove a car into like one of these uranium factories, it could like cause hundreds of deaths in that town. So it's pretty significant. Should I keep going with uranium, or do you want to talk about so the nuclear fuel cycle? I think this stuff, it may seem dry, but I think it's good to know if you want to invest in uranium. It's not obviously required, but I always try to learn as much as I can. So the nuclear fuel cycle, so there's a lot of steps to turning uranium into fuel. Exploration is the first step. So you have to identify the deposits somewhere. And then then the mining and milling of the raw uranium. So that's right here. And this is like the first step after exploration. Then you do conversion, enrichment. So raw uranium must be processed, and it usually needs to be enriched also, depending on the grade, to maximize its efficiency as a fuel. And it goes through all these reprocessing, high waste level, waste disposal, spent fuel, and the last step is electricity. After it's irradiated in reactors, it needs to be cooled down before it's disposed of. So only a portion of what they do is turn into fuel for nuclear reactors. But there's a good amount that needs to be disposed of. So they have to go through an extensive process to dispose of the uranium. Sometimes they recycle it. Sometimes they can recycle the waste and use it to make more uranium. If they do that, that's kind of like this process, like when it goes back to this part, and then so it's when it's reprocessed. So how is uranium made into nuclear fuel? So uranium goes through solid, liquid, and gaseous states of matter. So solid uranium ore is dissolved into a liquid and extracted through in situ leaching. That's what we talked about earlier. That's part of the mining process. And then it's turned into a solid yellow cake right here. So it goes from the ore from the ground to yellow cake, depending if they use in situ or the traditional underground mining. Then it's converted to uranium hexafluoride gas, step 4, centrifuged, which I think is like put into like a cylinder and mixed. I think that's the definition of centrifuge. Wait. Yeah, I think that means it's put into a cylinder and mixed with other elements in order to convert it to uranium. It's put centrifuged and enriched and then processed into uranium dioxide. Uranium dioxide is a black powder-like substance. So this is dioxide. Then it's compressed and sintered through heating to make up uranium pellets. This is the pellets are used as fuel. The pellets are then inserted one by one into long metal tubes, that's right here, which are stacked together to make fuel assemblies, the main source of fuel for nuclear reactors. One day we'll be using this for our car. Uranium. Potash is mined with a similar method to how uranium is mined. Potassium is not as interesting, but they use a lot of commodities or fuels. There's similarities with how they mine it, and they're all really, really dangerous. Like, it doesn't matter. They've all can lead to lots of deaths and lots of problems if the people controlling the plant aren't careful. Because not only can do all the time people die at these facilities, but it's not just the people at the facilities that die or get injured. It's also people locally that can get affected. But I think uranium is a little more touchy than others because if somebody brings it home with them and then could affect their family. I don't know. I just made that up. Uranium fueled cars. I don't know if that's possible. I just threw that out there. I thought Doc Brown did that. Didn't Doc Brown do that on Back to the Future? That's why I said it. There's no logic to that. So uranium production by country. So you probably know, if you follow uranium, Kazakhstan produces more uranium than any other country in the world. This is by year from 2013 to 2022. This is from the official website, uranium website. I can't remember the name of it. Canada has a lot of uranium. Australia has one of the largest uranium reserves. The flux capacitor, that's it. So I usually get my uranium knowledge from Doc Brown, so I trust him. Canada, some people don't realize, but they do produce quite a bit of uranium. And then the countries surrounding Kazakhstan, like Uzbekistan and Russia, lots of uranium come out of those countries. U.S., not much. We're less and less, it seems, as time goes on. But Australia controls 28% of the world's uranium. Not Kazakhstan, they're 13%. Then Canada. And U.S. is only 1%. So more countries produce uranium. This is like 99% of the production is from some like the top 15 countries. And I guess the reason it got more kind of more popular, or the more investors were talking about uranium, is because we've been in like a decade-long bear market with uranium. Because in 2011, Japan got hit with an earthquake and tsunami at the same time. So their Fukushima Daiichi plant and all 6 of its external power supply sources were lost due to damage from that. Because during these events, the emergency diesel generators in the basement started up again. And the tsunami submerged the generators, and the stations blacked out, and 3 reactors experienced meltdown. So before the tsunami, Japan had 54 nuclear reactors. I think now they have 10 as of 2022. So that really lessens the demand for for uranium, because when you have like there's not that many reactors in the world. There's only like I think 250. When you have like 10% of the world's reactors, it's Japan's decommissioning of more than 10% of the world's nuclear capacity was kind of wiped out. Then but Earth is a bomb ready to invert. So we have the most nuclear reactors. This is out of 2022. It's hard to find data more recent. We have 92. Then France, we actually went down. We had 104 in 2011. Now it's down to 92. And China went from 13 to 55. And here's a spot price. So you see in 2020, like 2021, it went up a little bit, but it really jumped in 2024 and the end of 2023. I bet you that Cameco stock follows this. So at the end of 2023, 2024, you can see it doubled, and you can see it's pretty much flat 2020, and it went up a little. So it looks pretty similar to and this is why when I started kind of fizzling out, like I started losing interest in this project. But then I found this guy's article. And if you want to know about uranium, he's kind of an expert. He talks about Fukushima in 2011, because that's the big thing in uranium. But he has some cool charts with the China reactor requirements is up here, because I guess China now has the most reactors. So there's 436 nuclear reactors in the world. Utility uncovered uranium requirements. I didn't look at this that closely. I don't really. U.S. hyperscaler workloads by type. Okay, so I guess this is AI data center demand sprouted by almost overnight, and some project a 4x rise in AI data center power demand and a hyper. So I guess AI is supposed to create demand for uranium. Is that? I think that's what it's saying, right? While investors trip all over themselves to get into NVIDIA, energy is the hardest part. Now consider how the market values AI plays, as well as how aggressively investors are scouring for second and third derivatives on AI, and then compare those AI inebriated valuations with those of energy companies. Right. Yeah. I mean, uranium is used in submarines, military ships, nuclear weapons. It's not just used in nuclear reactors, although probably 80% is from nuclear reactors. So this is millions of pounds. I'm not utility spot. Latin America, Middle East. Okay, so they have, yeah, the Uranium Global X ETF. So you can see how much that's gone up. The closing price is yes, I don't know. I mean, it sounds good. I'm not. I don't know if we missed the boat on uranium because it's gone up so much. I guess they're saying it's going to keep going up, but I guess when you own a stock, you always say that, and when you sell a stock, you always say the opposite. It's going to go down. So I don't know. So what's Barnes and Noble's? Okay, short percentage is 4%. I guess it came down a lot, right? $86 million shares short. Is that what that means? 86. This says 2 million shares short on April 30th. It's hard to. I wish they made it clearer. Being at short interest. Okay, so this matches Yahoo Finance. 2 million shares short. No, I'm not doubting you because Yahoo Finance is as of April 30th. I'm just looking. It's really hard to find a real number for short interest. It's not like a shares traded. It's not like the volume or derivatives. It's not kind of like they're possibly doing a major offering in a couple of weeks. So they shorted 30 million shares last week. Wait, who shorted it? Okay. So where on Twitter? BNet trending up on Reddit this weekend. $2 million. Maybe FinViz. Maybe FinViz shows short interest because I'm paying for FinViz. Okay, short float 14%. Okay, this is 5.49 million on FinViz. So this should be more up to date than Yahoo Finance. So they are calling BNet the next GameStop. Yeah, I don't know. How do you find? There's probably a way to find it. Charts, futures. Place discuss Barnes & Noble. CrowdStrike. Check out the options activity on it. Okay. Well, there's a lot of volume. $4,800. Wow. 4,800 volume. I wonder what's. Let's look at what's. The GameStop 4,800 volume. GameStop is 4,000 and 6,800 for $1.80. I mean for 20. Look at all this. Look how much volume for $128. 27,000 contracts. That's That's 2.7 million shares at 128. That's $348 million of stock just on the 128 strike. That market cap is absolutely tiny. I like that part. Oh yeah, Barnes & Noble. It's I guess at $2, it's pretty cheap. Only 10 cents. and it's trading at 58 cents. So it has to go up like 300%, and then yeah, I don't know. I wish I could. I guess you need balls to do this stuff. I'm too hesitant. Well, look how much it's come down, Bill. It IPO'd at 38, went up to 330. Now it's down to 60, 50. It went from 150 million revenue to 1.2 billion. It's probably still losing money, of course. Positive cash flow. It's trading at 23 times forward PE, so it's okay. I guess people don't care about the underlying fundamentals when they look at these stocks. They're just looking about how much short interest there is. Yeah, I'll be right back. I gotta. I guess I have to barbecue. I can't get out of that. I don't really want to barbecue. Okay, right. The short interest on the free sites. No, but I did look at FinViz. I pay for FinViz. This should be up to date. So the short float is 14%. And this is 4%. So it's 15%. So 5 million shares short. And this is 2 million. So I think it's 5 million. That's probably as of Friday. There's a website for cost to borrow, right? I've used it before. It's a free website. I think, yeah, only for a swing trade. I don't know, like for a long term. Where do you find that information on the cost to borrow is 296? Yeah, BNET went up a lot, but then it came right back down. That's what I'm saying. Like, it was over $1. It went from 18 cents to $1.13. So it went up like, I mean, if top to bottom, I mean, which would be hard to do, but like 900%. But it's down 50% since that top. So is it? So April was trading above 58 cents. Look how much it came down. That gap, it definitely got filled up here. Look at that gap down. It's a big gap. 416. So it took 1 month exactly to fill the gap. And it filled it here and here and here. Do you guys know what I mean when I say fill the gap? Because it closed on 415 right here. Then the following day it opened like right here. It opened at the bottom of the screen. So when there's a gap, that means it kind of like just jumped, like checkers when you jump over another piece without even going through. Because you would expect to be like a smooth line, like the price. This is smooth. There's no gaps. There's a little gap here because it just jumped. And 90% of gaps get filled. So this gap, it actually didn't get filled till here because it had to fill it. And this gap right here, see, the price has to touch this area. So this is the gap. It has to fill this space right here because it gapped down, and it didn't ever fill it. It did a little bit here on May 17th, but then it really filled it on the 21st. It means nothing, I know, but these are the terms people use. So I'm just going with it. So the quarterly revenue is up in the first quarter. Gross profit is up a little bit, but they still have an operating loss. Which isn't good. If they have an operating loss, they might have positive. Okay, they have negative free cash flow, 87 million. They lost in cash in the most recent quarter, worse than. So yeah, fundamentally they're just junk. You know, they should go out of business at some point. They're very unprofitable. You know, they're in retail, which is tough. So yeah, so maybe I'll buy it. But yeah, but I think there's a chance for short term. Yeah, it looks like not too long ago, just this year, it was over $2. There's no reason it can't get to that level if there's enough buyers kind of pumping the stock up. But I don't know about a short squeeze. Maybe. I don't know. Because no analyst are pricing the stock or predicting the future. Let's see the future growth estimates. Revenue is expected to be up a little bit. Looks like someone's projecting. Oh, that's for the past. Free cash flow of 12 million. I don't know how that makes sense because we see that they have negative free cash flow. Your negative free cash flow. Last quarter is positive. Yeah, FFIE, that's a good stock. They did a split, a reverse split. Okay. So they were trading at $5,000 a share. Why does it do this? I'll treat you. I don't, yeah. What's my Twitter account? Yeah, I forgot what my Twitter was. I don't really use it. Okay, well, yeah, good luck shorting. Yeah, FFIE, that was a good short. Well, happy Memorial Day. I think I have to barbecue. So, yeah, thanks for stopping by. Did Barnes & Noble create GameStop? I don't think so. Did it? Babbage's. I remember that store, Babbage's. Barnes & Noble did own GameStop. I think they acquired GameStop at one point. It's not my birthday. It's Memorial Day. Yeah, Barnes & Noble purchased Babbage's for $200 million. That's their connection. But okay, yeah. Thanks for joining, and enjoy your Memorial Day. And I'll talk to you next weekend.